Welcome back, everybody, to the afternoon session of the Consumer Advisory Board meeting. This morning, we heard from a number of the Bureau offices about a great deal of the work that goes on behind the scenes to make the marketplace safer. This afternoon, we'll hear from CAB members about their views about opportunities and challenges in the consumer reporting market. And following that, we'll hear from Bureau staff about recent updates in the Bureau's consumer complaint database. But we are on to our trends and themes discussion this afternoon, where we get to hear from distinguished members of the advisory board. So to kick us off, we have CAB members Chi-Chi Wu, the National Consumer Law Center, and James Wayman from FICO. As an introduction, James Wayman is Executive Vice President of FICO's Scores Business Unit, a position held since 2012. He leads all aspects of the global FICO Score business, including its use in risk management and its distribution to consumers through various channels. His work includes global initiatives designed to positively impact consumer financial inclusion and consumer financial education. At FICO, Jim has developed deep insights into consumer credit trends and reporting practices, which he routinely shares with a broad group of stakeholders. Prior to FICO, much of Jim's 25-year career has focused on consumer marketing, including financial products, where he studied consumer behavior and developed communication strategies designed to influence consumer attitudes and actions. Our other speaker, Chi-Chi Wu, has been a staff attorney at National Consumer Law Center since 2001. Chi-Chi focuses on consumer credit issues at NCLC, including legislative, administrative, and other advocacy. Chi-Chi's specialties include fair credit reporting, credit cards, refund anticipation loans, and medical debt. Chi-Chi frequently serves as a resource for policymakers and the media on consumer credit issues. Before joining NCLC, Chi-Chi worked in the Consumer Protection Division at the Massachusetts Attorney General's Office and the Asian Outreach Unit of Greater Boston Legal Services. Chi-Chi is co-author of the legal manuals Fair Credit Reporting Act and Collection Actions, and a contributing author to Consumer Credit Regulation and Truth in Lending. Without further ado, thank you so much.
Thank you, Meva, for that introduction, and thank you to the CFPB for having me here to speak. I'm really excited to be speaking this afternoon, and I'm more excited than I thought I'd be because I get to follow the presentation from this morning from the supervision team about what's going on in terms of their efforts to reform the consumer credit reporting system. For me, this is huge. I've spent over 10 years working on consumer credit reporting issues, and the National Consumer Law Center has been working on these issues since we were founded. And for 40 years, we've watched, advocated, complained about the problems with the consumer credit reporting system and the problems with accuracy and the problems with disputes, the sort of bread and butter issues, and just got nowhere and saw continuing problems with accuracy and an entirely automated travesty of a dispute system. And it is not till now that we've seen real change in the needle move, and it's just great to be here at this moment. So the title of the session is Trends and Themes. So I will take it very literally, and I will talk about trends first and then themes. And the trends will have to do with accuracy and disputes. And what I'd like to do is to actually focus a little bit about where we came from and the situation before the CFPB got involved and was able to make these considerable reforms come about. So hopefully I can work this clicker. In order to see the trend, we have to see the baseline. And the baseline is the 2012 Federal Trade Commission study. Director Cordray went through the statistics before, so I won't go through them again, except to note that 5% figure of consumers who have serious errors in their credit report, serious enough to cause the denial of credit for them to pay more. Now, there sometimes some talk, well, that means 95% of folks don't have such errors. And so, the system's kind of working okay. But for the 5% who do have these errors, and that's, 10 million or over 10 million consumers, that's a big deal in terms of their economic lives. They're looking at significant harm to their economic lives that they didn't deserve, something really critical to their economic health. And we the analogies we use is it would not be acceptable for 1 out of 20 planes to fall out of the sky or 1 out of 20 cars to spontaneously combust. I think the best analogy is actually from John Oliver. And if I had time, I'd show the entire clip, because if you want a primer on the problems with the credit reporting system, just go watch that clip on YouTube. It's hilarious. He used an analogy involving frozen ice cream and bodily fluids from goats. And anyway, I can't say the whole thing, not safe for work, but you get the idea. It's not an acceptable error level. And the other baseline information we have is that when you look at the complaints to the CFPB, since about, I think, mid 2015, the nationwide consumer reporting agencies, that's the term under the Fair Credit Reporting Act, or as I'm going to say, NCRAs, or nationwide CRAs, they have been 3 out of the 4 top most complained about companies consistently during that time period. And in many months, they have been number 1, 2, 3. Just recently, they were knocked off by Wells Fargo. But you can see the level and the scale of problems we're talking about. And so that's the baseline. And the trend, of course, is what we've been seeing from the CFPB. You heard the presentation from this morning from the folks from supervision about the reforms that are beginning to happen, and then systems and the policies and that are beginning to be established. The other things we should point to are the enforcement actions against furnishers for accuracy problems, as well as the bulletins and the dispute statistics. So I'm obviously not going to go through that again. There's a very good report and a very good presentation on all that. But just to say that, this really should have a huge benefit for American consumers. This really is another instance of the CFPB making a huge difference in the life of American consumers. Because if you think about it, it's not just 1 out of 20 consumers. I mean, that's 1 out of 20 consumers right now. That's a snapshot. So if you think about the concept of lifetime incidence, it may not be you who's the 1 out of 20 today, but as you go through your financial life, that those odds go up and up and up. And so I think American consumers should see improvements from these reforms. And these things really matter. I mean, it's not just dollars we're talking about, it's people's reputations. Fundamentally, consumer credit reporting is about your reputation, who you are. And to sort of mangle a Shakespeare quote, who steals my purse steals trash, but who filches my good name makes me poor indeed. And that's what we're talking about here. So I did want to talk a little bit about where we the sort of issues that remain. Alice and PJ did talk about this being a work in progress. I do agree. We're not at the end point of reforming the system. There are a few things I think that do need attention and further work. One is this issue of mixed files and matching criteria. I think that in particular, because a mixed file, when someone, this is when information from 2 different consumers is mixed up, it can be, devastating if one person has a good credit record and another person doesn't. It can just ruin someone's financial life. And so, the overly loose matching criteria used to match information from a furnisher to a consumer's file, the fact that, not the full Social Security number is used, which, as everyone knows, is the one identifier that's unique to each American. The fact that, partial name matches, partial address matches are used. It's not acceptable. We need to do better there. Proper use of standard reporting formats. for the big three nationwide CRAs, that means the Metro 2 format. The Metro 2 format is the standard data reporting format developed for furnishers. And it's funny because the spokesperson from the Consumer Data Industry Association has once said, oh, even the consumer advocates don't have a problem with Metro 2. Well, damn straight. In fact, we think all furnishers should be complying with it strictly because this is the guideline for accurate, this is the common data dictionary. This is the common language. And if a system of information is going to work, everybody's got to be speaking the same language. You got to be able to make apples to apples comparison. And if you don't follow the reporting format, then you risk making things misleading. Are there problems with Metro 2? Yes. There is room for improvement. For example, the lack of a specific code for a short sale. But it's in most parts designed to provide accurate information. And when it's not used, for example, in the earlier presentation talked about furnishers failing to provide the date of first delinquency. That's the date that starts the 7-year clock under the FCRA. If it's not provided, that information could potentially go stale illegally. And so, we think that better compliance, one area that we're seeing lack of compliance with the Metro 2 reporting format is reporting of trade lines or accounts after there's been a Chapter 13 bankruptcy. And then the third point in terms of remaining issues in terms of accuracy reform, I put ensuring continued vigilance. Basically, as I said, this is an industry that for 40 years resisted reform, despite many lawsuits, and despite the efforts of the FTC and state attorney general. Instead of reform, they would just, fight the lawsuits, and even things like an $18 million verdict in Oregon for a victim of a woman with a mixed file that went on for years and years, didn't get them to change their systems. What got them to change the systems is the CFPB's supervision, and that has to continue. It has to continue vigorously, because without the CFPB's supervision, I think you'll see backsliding. And so it's really important that the CFPB be able to keep doing that. So just on the dispute process, the baseline there was an utter travesty of a dispute system. The graphic here is meant to represent how consumers would take all this time to put together a detailed dispute, make copies, write a letter, march down to the post office, send it certified mail. All that information would be turned into a 2-digit code, two or 3-digit code, not hers. And something like 4 or 5 of the same codes were used 80% of the time. And then that code would be sent to the furnisher, and the furnisher, whatever the furnisher decided, the furnisher would then send it back to the credit reporting agency, and the credit reporting agency would accept that without question. The phenomenon we call parroting. Yes, that's a parrot up there. That's supposed to be a parrot. It's my lone attempt at graphics. I'm really glad I went before Jim, because you're going to be blown away by his PowerPoint. And I've got this little parrot here. But that's to represent parroting, that the credit reporting agencies would always parrot the furnisher, even when 40% of the disputes involve debt collection, despite the fact that debt collectors only provide 13% of the information. And so, and even when, the examples we've seen are, there's a court judgment saying the consumer doesn't owe the debt, or there is other evidence that the consumer is right. Yet, despite all of that, the credit reporting agencies would always automatically defer to the furnisher. So again, there's been some reform already, and then with these reforms announced by supervision this morning, we're hoping that it fixes a lot of the problems in the system. I just wanted to also give a hat tip to the New York and multi-state attorney generals groups that also got settlements from the big CRAs to stop, to conduct independent reviews and to deal with medical debt and a whole bunch of other issues. So what's outstanding? I think the issue. So in 2013, a lot of nudging from the Bureau. The nationwide CRAs started making these documents available during disputes, and so now furnishers have to look at them, and the bulletins say, are very clear they have to look at them. So now, what's left? Well, parroting. We are concerned, whether parroting will stop or not. Because the incentives are always there to defer to the furnishers, which are also often the users and the ones paying for the reports from the CRAs. So that's one issue. And then the other issue is, sometimes when you have a dispute, the upshot is that the account is marked as disputed. The CRAs take the position that they're not tribunals. They don't make decisions when consumers and furnishers have a dispute. I think that's understating their obligations under the FCRA. They do have an independent obligation to review information and make a decision. But to the there is case law saying they don't have to deal with legal disputes. And so in those cases, the accounts are marked as disputed. They aren't considered by scoring models when that happens, but in some ways that's still as bad because often they can't get credit, especially mortgages. Fannie Mae and Freddie Mac will kick an application to manual underwriting, which is often the kiss of death if there's a dispute. And so I think one of the issues is to protect the rights of consumers to dispute, to have their accounts marked as disputed, and not to be treated unfavorably because of disputes. And then, of course, continued vigilance. This is another area. The whole automated system was developed to minimize costs because disputes are a cost to both CRAs and furnishers. And without the CFPB being there, we would again be concerned with backsliding. So those are the trends that I want to talk about. I'm turning now to themes. The big picture issues. I'm going to go through these really quickly because in the interest of time, but I did want to touch upon the theme of alternative data because there's been a lot of talk about it. There was the field hearing in West Virginia, which I was at. So I'm not going to go, I'm just going to really summarize it very quickly. Alternative data, we think it's neither a be-all, it's neither the next great thing or it's not a bad thing either. It's a tool. Tools can be good, tools can be bad. The devil is in the details. It depends on what kind of data and how it's used. We have concerns about some types of data like gas and electric utility data. Other types of data like rental data are promising. Telecom data doesn't have the same issues as gas and electric, and it's better when it's used sort of outside of the files of the nationwide CRA so that there's no unintended consequences in terms of when reports are used for things like insurance or employment. That's the other principle, do no harm. We want to see that alternative data doesn't end up harming consumers, both in terms of creating bad accounts for folks who do have thick files, protecting their ability to dispute when they do have a problem like with their cell phone or cable provider. Privacy, fairness are also concerns, as well as accuracy and predictiveness. If we are going to use alternative data, especially if we're talking more on the sort of the big data, and we want to make sure it's signal, not noise, and that it is accurate and can be objectively tested as accurate. The other theme I wanted to touch upon is the whole system and looking at it from a very high level view. Credit reporting it is predictive, absolutely. Someone with an 800 is much less likely to default than someone with a 600. But someone with a 600 is actually not more likely to default. They may have a 20 to 30% chance of defaulting, but that means 70 to 80% of folks would be good borrowers at a 600. And so it's a very sort of there's more precision that could be in the system, distinguishing between folks who had bad luck versus folks who really are not very responsible. And that is where I think the next frontier could be in terms of this kind of credit reporting or evaluating consumer credit worthiness. Um, the issue with using credit reporting or any information based on past behavior is it's not just evaluating something based on the past. When you observe something, you also influence it. And so using the past also perpetuates the past. And so you do get this catch-22. If someone does fall into financial distress and then ends up with a bad credit record, that kind of keeps them from recovering because it could exclude them from not only affordable credit, but jobs, insurance, housing, and that in turn affects their financial health and then makes it harder for them to pay bills. And this whole catch-22 of financial distress is especially salient when we're talking about racial disparities in credit scoring. There are numerous studies that show that as a group, African Americans and Latinos have lower credit scores. And in fact, we did a policy brief on this. And if anybody wants a copy, I have some copies with me listing all of these studies. And the reason for this isn't because these communities are less responsible. It's because they have historically been subject to an unlevel playing field, outright legalized discrimination, 400 years of slavery, Jim Crow, redlining we talked about earlier. And that has an impact on their financial health. It creates what's called the racial wealth gap, where the average white family has $100,000 and the average white African American family has $7,000 in assets, and the Latino families have a bit more. That has an impact on credit scores, credit reporting, as well as so many other things, because when a family and when an African American or Latino family gets into financial distress, lack of assets means they have less ability to overcome that period. With $100,000 in assets lets you deal with an episode of financial distress much better than 7,000. And you can see it. For example, ProPublica did a study showing higher rates of debt collection lawsuits against African Americans, and they also attribute to the racial wealth gap that shows up obviously on credit reports, and again that helps perpetuate the cycle of inequality. And so, that is another area in which alternative data may or may not be able to help. I mean, alternative data could suffer from some of the same flaws. I mean, all of these issues of inequality affect so much in our society that, other things, I mean, telecommunications, for example, if you have trouble paying your credit card bill, you might have trouble paying your cell phone bill. But more forward-looking data may reflect less inequality. It also may, things like cash flow or bank account transaction data also may reflect ability to pay, as well as borrower behavior, and that always should be the touchstone of lending, ability to repay. But in the end, when we're looking at these factors, to the extent that they can reflect less inequality, I think that's what we should be looking at as sort of as a policy basis, because we want to be able to use factors that overcome inequality, not entrench it. Thank you.
Thanks, Chi-Chi. Jim.
Okay. Oh, great. All right, good. Well, while we're getting set up here, let me just say that following Chi-Chi it's a pleasure and an honor. She raises many issues that are undeniably important, and I would say that we sympathize and agree with many of her conclusions, but certainly not all. We probably need more than 15 minutes or maybe the hour that we have here to address all these fully. And I'm not prepared to do that, but let's touch on some of the themes and trends that we're seeing in the marketplace. And I'd like to probably just get through this quickly, and not wanting to monopolize the time here, get onto the things that you want to talk about as a group here. I always start these conversations by saying, we're not the lender. We understand some of the issues the lenders face with respect to regulatory compliance and wanting to grow their businesses safely and responsibly. we're not the data owner or manager, but we understand some of the challenges that the CRAs face and understand the impact of the integrity of the data in our products. We're not the policymakers, but we have a view on impacts that we see from our perspective, and enjoy the conversations we have back and forth and the perspectives we get. We're not the consumer advocates, but we also, Chi Chi and I have gone back a long way, and I always respect her perspective, and we've frankly incorporated perspectives both from the CFPB and from Chi Chi in the products that we've brought to market, and have modified those based on the perspectives and feedback. And so we respect that very much. But we just try to do the one thing really well, which is build the most compliant, most predictive scores. And we do it on a worldwide basis, and we'll get into a little bit of that. But we're notwithstanding and recognizing the challenges, we're very hopeful about the prospects for financial inclusion going forward. And we see a lot of innovation happening. So I'll talk a little bit about that, the promise of alternative data, and just some other important considerations. So with that, I'll is my slides up here?
No, apologies. Yeah.
Oh, okay. No worries. Listen, I'm just going to start in, and if you've got the deck, I'm on slide. I guess they're not numbered, but the one that shows the innovation here, and I'll just describe it for people in the audience and online. What we're talking about here is there's rapid worldwide innovation that's coming in different forms. We see fintech, and we've talked a lot about that in this session and in past sessions. And there's companies here that represent, strong innovation, and they're generally around new platforms, new data, new ways of organizing the data, and assessing risk and attracting customers. And a lot of that's happening in Silicon Valley and other places around the United States and other places around the world. And I'm not going to go through all these, but we've heard a lot about artificial intelligence and machine learning, which goes beyond some of the traditional ways that we've organized the FICO score with multivariate regression analysis and other statistics. And we've got important experimentations going on there to bring new products to market, and I know others do too. Big data is a little bit cliche, and there's lots of interesting activity there. There's metadata, and just to give you a little context here, and I'll talk about this in a little bit, but we're doing work all around the world where the challenge, frankly, is much greater, and the opportunities to bring groups of people into mainstream credit are actually much greater. And so, the acceptability and the comfort with different approaches is different as well. So let me just say that what I'm about to talk to you here is not something we're doing in the United States, but elsewhere. And one of the things we're doing is in India, where there's 500 million people that are unbanked and outside the traditional credit system, and yet there are many creditworthy people there that just want a fair shake and a chance to get access there. And we're working with a company that has what we call metadata, and it's data that's being captured. So we talk a lot about social media and mobile phones, but this is metadata. So it's not the content of what's being posted, but it's other stuff like the use of the phone and how often it's used and what it's used for. Or in social media, I asked one of our lead scientists on this project, and I said, well, give me an example of what's predictive. And she said, in social media, here's what we found. So we did a lot of research, and it was interesting to me. So if you have a small social media network and aren't very active on that, that's an indication of higher risk. But if you have kind of an average amount of followers and friends and are kind of active but not overly active, kind of a normal amount of two-way activity in that network, that tends to be lower risk. And then it flips over into high risk if you've got a very big network and it's a lot of maybe one-way communication. That's what we found in the data. And I was fascinated by this. And whenever I say this, I always look around the room because everyone's kind of thinking about what are the implications for their own credit risk profile based on that. And just a quick aside, I was we were at the Sunday dinner with my wife and our kids. I've got 6 boys. They're all teenagers. They're, well, 10 to 18. And I'm talking, they know a lot about the credit score and its importance. And I'm talking about this notion of their social network, right? And I'm talking about, small social networks is less risky. A medium one with kind of normal activity is less risky. And I see them kind of thinking about, what are the implications then for their risk profile? And again, we're not doing this in the United States, and so it's not going to affect their FICO score. And then they're really thinking through it. And then Will, one of my twins, he raises, he kind of says, Dad, are we going to be okay? Because you have no friends and no followers and fewer likes. So I assured him that we're going to be okay. But that's, so there's a lot of experimentation and work being done, psychometric data, consumer contributed data. This is an area that we're working on where the consumer has a great degree of control over the data that will be used in a risk management decision. And we think that can be predictive as well. I'm going to move on to the next slide here. Global financial inclusion, a little bit of a recap, but it's a combination of emerging technology, innovative analytics, new data sources, new platforms, new partnerships, and certainly working with policymakers in countries all around the world. This next slide, and I always am a little sensitive, this isn't meant to be a commercial at all. For FICO, there's lots of good work being done by competitors and others all around the world, and in particular in the United States. But we're in the business of creating products, and we do research to do that, and it's a little bit difficult to separate the knowledge base from what we do. So I apologize if this is somehow feeling like it's promoting FICO. It's not meant to. We just to give you a sense, these are the jurisdictions and countries where we've developed scores, and in many of these countries we are the industry standard score, much like we are in the United States. On this next slide, because there are 3.3 billion people in the world who are unbanked, 2 billion are unbanked, another 1.3 billion are banked but have no credit history and no traditional credit bureau file. We're doing important work that will impact hundreds of millions of people who've been locked out. And I think what's important here is we can look across this work and knowledge base and bring back to the group here and others that are interested in our findings and maybe instruct ways to improve financial inclusion here in the United States.
Jim, could you just say what the green and blue?
I'm sorry, yes. The
Main
green
things.
is where we've got the alternative data outside of the traditional FICO score, kind of the standard FICO score, either live in market right now, testing going on, or in development. And I will just say that one reason, people talk about in certain undeveloped countries where they're going to skip landlines and go right to mobile because to build that infrastructure is very expensive, and it can be done more cheaply now through new technologies. And there's a little bit of that going on in countries around the world where, notwithstanding that improvements can be made, you can't imagine how lucky we are that we've got robust data sets with positive data where there's lots of visibility, and more work needs to be done, but lots of visibility for people who are creditworthy and lots of competition. In many countries, there aren't these databases, and so we need to look outside. I mean, alternative data and other approaches are the only way to bring people in and to make these processes more fair. And like I said yesterday, whenever we go and are working with policymakers in countries around the world, one of the most important things is to bring in that positive data. I mean, there will be suppression in negative-only databases. And we got to be concerned about where those items are flowing in, even in the United States, without the offsetting positive payments, as those are concerns, because we'll see the collection without all those positive payments. Now, again, the good news is we've got lots of rich positive data in the 3 national credit bureaus, and much to their credit. On this next slide, I just Ken Brevard is here with the CFPB, as everyone knows, but for everyone who wasn't in the meeting yesterday. He's world class. He's a very strong hire here, a data scientist who's done a lot of good study on invisibles and unscorables. And the CFPB has published its own report. And in that report is the Appendix A, which is, I think, phenomenal work, and it talks about why we at FICO can come up with different numbers than the CFPB about how many people are unscorable. And basically, it's because what we call fragmented files and the ability to understand which are true individuals, and you all have matched it up to the Census Bureau files. We've matched it up to public record and other data files, which again can be very robust, but that's how we come up with slightly different numbers. So 190 million people have traditional FICO scores in the United States, which leaves 53 million. Again, I think the CFPB number is 47-ish, 53 million that are unscorable. When we break out the unscorable, it's two big groups primarily. 25 million have no credit bureau file at all. I think the CFPB number is 26. So we're very, very close there. Again, these are people who've never had access to traditional credit and have never been reported into the traditional credit bureau files. There's another 25 million, excuse me. There's 28 million that have a credit bureau file. 25 million are what we call stale files. So they once had access or had some form of credit there. And we break these out just a little bit differently than Ken did. But these are people who have no active credit being reported into the credit bureau files, and those files are frozen in time. And then there's 3 million that have gotten their first credit that are on their way to get a FICO score. In 6 months, they'll have a 6 months of activity, they'll have a FICO score. But I should just say for the stale files, after 6 months of no activity, we stop providing a FICO score. And it's not that we couldn't provide a FICO score, it's just that, and you'll see that credit profiles change, and unless you have active file data coming in, you don't have visibility to that. And so after 6 months, we stopped scoring them. On this next slide, I'm just going to give you a quick hierarchy of, and I'm going to skim through these next one pretty quickly. We talked about this a little bit, the hierarchy of alternative data or data involved in risk management. There's the financial account data, and again, notwithstanding that everyone's on their journey and more work can be done, the bureaus deal with lots of data and they get it organized and it's available for lenders and for folks like FICO to come in and model against. And they do a lot of good work there. That's the financial account data. There's bill payment data, which is next best. If you think about the obligation to pay your cell phone bill, it looks a lot like the monthly obligation to pay your credit card account, and that ends up being very predictive. And then there's non-financial data. Some of it's very unstructured, but this is the hierarchy. There's no reason to start with non-financial data in our mind. If other data is available, there's no reason to ignore, data that is predictive. And we've done a lot of research on a lot of different data and a lot of different approaches, and that traditional bureau file is singularly the most predictive data in terms of risk management that we found anywhere. This next one is just a quick 6-point test, and most of these I'm sure are pretty obvious. Everything has to be regulatory compliant with the FCRA, fair lending, and other, we talked about them this morning, all of the different regulatory tests that need to be for compliance with the data set. There's accuracy. I would just say, a couple that are really important if we're thinking about big impacts on lots of consumers is the scope. We're going to talk about 2 data sets that have broad scope. So when we want to sell products to thousands of lenders and even some of the nation's largest lenders, I mean, the work that has to go in to adopt a new score is considerable, and it has to provide an ROI. So it has to be broad. We have to be able to attract millions of consumers. So it ends up being a little bit of a barrier. Everything we do has got to be able to provide an ROI for the lenders. So that's one thing that you have to filter, everything we do through. Depth and breadth and coverage and additive value and predictiveness are probably some obvious things that these data sets also have to have. And again, this isn't meant to be commercial. We do have a product. There's other products. I'm sure you'll find similar things. I just wanted to set this up to just show you the impact. We have a FICO Score XD. It's built on 2 data sets plus whatever data is available on those 28 million that are in the traditional credit bureau file. We'll pull in that too. Even if it's old, even if it's too new, it gets included in the XD score. But it's telco data. There's 210 million records growing every day in this NCTUE Plus. It has positive data, so we can see the payments that people are making on their cell phone bills, landlines. It does have 3% of the records are utility, coming in from utility providers. So it's a very small amount of utility, and I know that's a sensitivity for Chi-Chi. It also has public record data and property data, and that gets included in well, and that's coming from LexisNexis. I should just add that the NCTUE is managed by Equifax, but it does not flow in to the traditional credit bureau file itself. It's housed outside of that in its own database. And I just wanted to set that up. And again, this isn't meant to be a commercial on us, but it's just to show you the promise of alternative data. Our typical scores, the 190 million that I showed before, they're all scored by traditional FICO scores. You can see, and this is the Gini coefficient. I'm not going to get into the statistics here. One is I quickly get in over my head, and I'm laughed at by my team. But you know, it's going to be too hard to go through. But the Gini coefficient is just a measure of the predictive strength of the model, and you can see that the traditional FICO score is right around the 0.5. If we were to score this new segment, and again, they're people who are just opening up their first credit line, based on that, what we have in the bureau data alone, you could see how much lower the predictiveness is of those segments. With the alternative data, adding in the telco payments, we get much better prediction on those same consumers because of the additional information we have on them. And that's the promise of being able to work with reliable scores that lenders can use to underwrite all kinds of products. We're starting in credit card, but that additional data, that current real-time data, is vital to understanding a more complete picture and a current picture of millions of consumers. On this next slide is just a little bit of the results as we've worked with lenders. Where are the most, the highest scores coming from in terms of these are through the door applications for credit. So these are people seeking credit, who's seeking credit, and which ones are going to, through this XD score based on telco data, public record data, and the data in the traditional Equifax credit file, where are they 620 and above? So 45%, I mean, this is good news. 45% are coming from people who've never had any access to credit. These are people who have 620 FICO scores and no traditional credit bureau file at all. The rest are new files. So these were people, again, that small group that has opened their first line. And then people with the stale files make up 17%. And here's the real promise. And I know we've had some different discussion of this. I think it showed up in a couple of different conversations already this week. But this is our experience. When an issuer underwrites a loan with FICO Score XD based on telco data, it's absolutely an on-ramp or a re-entry point into traditional credit. And the reason we know that is we look at the people who have a FICO Score XD, again, based on telco data, that's at a 620, and these things are aligned. The odds to score ratio are aligned, so a 620 FICO Score XD is going to go, those loans are going to go bad at the same rate as a traditional FICO Score, 620. 6 months later, or even a month later, if they have a stale file that gets reactivated, that 1 month later, now they're going to have a traditional FICO score. If it's that 45% where it's their first form of credit, we wait 6 months, and then they're going to have a traditional FICO score. So we can see then after they get that credit what their traditional FICO score is after 6 months of activity on the loan that was originated by FICO Score XD. And 80%, 78% have a traditional FICO score at 620 or greater. And once they're in the bureau and they have these FICO scores are integrated into thousands of lenders, they have all kinds of visibility. Now all lenders can see, we don't need every lender to integrate with FICO Score XD. Just a few of the very biggest ones originating credit card accounts with FICO Score XD will provide visibility to millions of people 6 months later because they'll be reported into the traditional credit bureau files and have traditional FICO scores. Here's a few, I just want to wrap up with, and I'm a little sensitive of the time here, but just a few important points that leverage a little bit, and maybe food for thought. I think this came up a little bit in Ken's discussion yesterday on the Nike swoosh analogy of credit journey and kind of credit life cycle. And this is really important because I think there's some misperception about the dynamic nature of the FICO score, and we intentionally construct the FICO score to be dynamic. And let me just show you the example here. We studied people coming out, and we were watching this cohort since the Great Recession. So these are people who went into bankruptcy, and a bankruptcy showed up on their file between October 2009 and October 2010, that 12-month period. Now, bankruptcy is one of the most extreme forms of a negative event, as you can imagine. And look what happens to your FICO score when you go into bankruptcy. Only about 24.9% of that 1.7 million people who went into bankruptcy at the end of that, kind of at that period in October 2010, had scores above 600. So most of the scores were in the 500s, 400s, even 300s. Does that make sense? Everyone following that? So the bankruptcy really, really impacts your FICO score. And you're in a moment of financial distress, and it's probably not the best, maybe not the best time to take on a bunch of new debt. But look what happens over the next 2, 4, and 6 years. By 2014, only 4 years later, 55% of those people have FICO scores above 600. In October of this past year, 66% of the people have scores above 600. Many have scores in the 700s. And what's interesting is that bankruptcy is still in the credit bureau file. Even as of October 2016, 96% of these 1.7 million people in this segment have a bankruptcy in their credit bureau file. Did you have a question, David?
Is this percentage of scoreable files or percentage of total files? So if people,
Oh, that's a good one. This is just scoreable. This is just scoreable. I'm going to get to the unscoreable in the next slide. That's such a good insight, David. But what this means is there was a time before the FICO score when you had a bankruptcy, and that was basically a death sentence. I mean, you'd walk into a lender with a bankruptcy that was 4 or 5 or 6 or 7 years old, and the perception was that, fool me once, shame on you, fool me twice, shame on me. I'm not going to lend to somebody who's got a bankruptcy. The fact of the matter is, with the FICO score, and this is, I think, the promise and the hope, and it speaks a little bit to what Chi-Chi's talking about, that even with a bankruptcy, you could be a 700 FICO score, you could be a 680, and banks will fight for your business. You're not going to, with the FICO score, a 680 FICO score with a bankruptcy versus a 680 FICO score without a bankruptcy those loans are going to go bad at the same rate. So banks fight for your business now because you're a 680 FICO score, and you've demonstrated that you're credit worthy even though you've been through bankruptcy. That's the promise of an unbiased, compliant score that's built this way. Now, I'll just make one quick point here. If you go to the next slide, what this depends on is having at least one credit product that's being reported into the credit bureaus. Does that make sense? With that one credit product, we can watch the return to credit worthiness. And even, you might be surprised to know, even in bankruptcy, 97% of the people, and we'll see it on the next slide, maintain access to at least one form of credit. It could be a student loan. It could be an auto loan that they don't want to discharge in bankruptcy because they want to keep their car. It could be their mortgage. It could be a credit card. But 97% of the people, even after bankruptcy, are continuing to make payments on a form of credit that gets reported into the credit bureaus. And with that, we can watch the return to credit worthiness. Does that make sense? There's another group of people that go through bankruptcy. Same cohort. Yes.
Can you break it down between people who were discharged and people who were in payment plans? Fully discharged, I mean?
Yeah, I can't hear, but I can follow up with that. Okay.
Yeah. Sorry, Jim. I know you want to get through your slides. I appreciate that. But this is a particularly interesting point. So is this true on paper? Because I don't hang out with big bank lenders, but I hang out with lots of .com lenders, and they will still keep bankruptcy as a flag. So regardless of their.
Well, this is what we're talking about. So the FICO score is one factor among many, but let me tell you the statistics. 72% of this group that went through bankruptcy by 2014 in the last 24 months. Now here's the way he said. In the last 24 months, this 1.7 people who went through bankruptcy, 72% had a new credit line, were granted a new form of credit and opened up a new credit line. 87% of this group has a new credit line since bankruptcy, and that bankruptcy is still in that file. So while it's true that the bankruptcy and the lenders will look to that bankruptcy and make modifications, their own individual modifications, what we're saying is that those loans are going to go bad. The agreed, to a 90-day delinquency at the same rate as any other 720, 700, 680, 660. Does that make sense? And it's just math. The data shows that that's true. So the next slide is kind of your point, David. And I'm so sorry. I didn't realize this would take so long. But after bankruptcy, no score. So there's a small group of people who lose all access to credit. It starts out at less than 1%, actually. So, I mean, obviously, prior to the event, you have loan products that, everybody had, credit of some sort that was, driving the reason perhaps to go through bankruptcy. So it starts out that, almost nobody has no, what these are no score. So after 6 months after 6 months of no activity, we stop scoring people. So maybe some of the early people that went through bankruptcy, kind of in the early part of this segment, that 12 months, by that time had lost all access to credit. But it rises up to 3.5% of the group. So 3.5% over time lose all access to credit. And after 6 months, and this is where we think it's not enough to think about alternative data and the variables that go into the model, but how you construct the models as well. Because after 6 months, we stop scoring that file. Now look at this, look at the return to creditworthiness. People went through a problem, but found work again. They overcome, they persevered, they recovered, and so did their FICO score. But it depended on having that visibility of those payments being reported in. When you don't have any payments being reported in, your file is stuck. It's frozen at your moment of financial difficulty. And when you recover, you regain employment and you recover, you're paying your bills, you're paying your rent. If there's nothing being reported in, we have no visibility. So we stop scoring those files because they're frozen and then they no longer reflect your current creditworthiness. We could score them. We'd make more money. But month after month, year after year, we would just be returning a very low score. So how you construct these scores is very, very important. The final slide is really the wrap up. And again, I'm sorry I've taken so much time. But, I think the hope is, look, Chi-Chi brings up some very important and sensitive, issues. And, it doesn't take a lot of thinking to realize that everyone's born into different circumstances. And that society ought to work for policies, and seek out policies to improve people's lives. I mean, that's kind of undebatable. I think reasonable people probably can debate about what the right approach is, because we feel that having an unbiased, objective measure of creditworthiness ends up being a way for people to overcome the perception that they're not creditworthy, that you can walk in and anybody, regardless of income or wealth or any other demographic factor, can have a high FICO score. And I'm not saying there aren't policies that couldn't help people overcome injustices and inequalities that exist due to, again, the circumstances of their birth. But the FICO score, if it didn't exist, and in many countries it doesn't, and countries where there's still a lot of state-sanctioned oppression and inequality and rules and regulations. But so having, good data and a score that can help people prove that that their creditworthiness is disconnected from, where they started, they can end up in a very different place.
Thank you both. Interesting presentations, thought-provoking. We have a little bit of time for questions or comments for our two excellent speakers. So let me open up the floor. Questions, comments, Tim.
Thank you. A question around the XD. What percentage of those 53 million were above the 620 in the data you showed?
Yeah, about 33, 34%, as I recall, are scoring above 620. But what's important here is that there are 18 million people who went through financial difficulty and are unscorable, and they have no active data being reported into the credit bureau file. So it takes some time, as you saw in the chart, for enough kind of telco payments to be made to offset that, but it does happen over time. And the fact of the matter is it's a dynamic score. So everybody is on the way up. It's just taking more time with the telco and the public record data. Does that make sense, Tim? So it's a dynamic score. No one's stuck. And as they continue to make their cell phone payments and landline payments and cable bill payments, that'll get credit, and those scores will continue to rise.
Another question about the XD data and kind of sort of building it in with the Chi-Chi's point about how race has been an issue that's really pushed people out of the credit system. What are the demographics of the people that are being given a score who were non-scorable through the XD system? Is it reaching into communities that are historically underserved by our credit markets?
Yeah, and I think Ken touched on this yesterday, that people who have no credit bureau file are going to be younger people and people new to the country. And to Chi-Chi's point and Ken's point yesterday, people who are unscorable are going to also be disadvantaged groups, which is why we think it's even more important to find ways to seek out data that can help prove their creditworthiness.
And I just want to say that we do very much appreciate how responsive FICO has been in developing the XD score in terms of some of the concerns we've raised. And, it too does show promise. I mean, I'm really curious and eager to see uptake on it and to see how this will evolve and, the usage and whether it's going to help some folks get into the system. I also very much appreciate this research and that you did it just based on my comments. I want to make clear, I'm not anti-score, FICO score, or credit scoring in general, but, really want us to think about sort of pushing and evolving and getting to the next level. I totally agree that using scores is better than subjective judgmental systems before, because those definitely were infused with race. On a very technical point, with respect to this research, I wanted to bring up this issue we've seen in the bankruptcy context, where folks who undergo bankruptcy, Chapter 7, who do not reaffirm their mortgages but keep paying on them because they want to keep the house, those payments are not reported right now. And there's unfortunately bad case law saying that they do not need to be reported. And obviously, if the concern is to keep these folks with active files, this lack of reporting is then going to hurt them.
Yeah. Look, can I just add one thing real quick, because it comes to the point that was made earlier. We looked at basically all what we call the derogatory items that end up, the major negative items that end up in the file: foreclosures, major collection items, major delinquency items, and the pattern's exactly the same. That recovery looks exactly the same. The lost access to credit tends to look a lot the same, but people recover, and so do their FICO scores, and it's a very hopeful thing that we should all keep in mind. And that's part of the education process. We got to give 47 million people have scores in the 500s and below. And, there's great work being done that we talked about yesterday, and by the nation's nonprofit financial counselors and government-based counselors. And the message of hope that you can overcome, everyone makes mistakes and bad things can happen, and, people can overcome it. And that's the message we should really be bringing to people.
Kathleen?
I wanted to follow up on Anne's question. Do you have the actual demographics of the people who are covered by the XD product? Like what % are African American, Hispanic, white?
I could see if we have that. I don't have that here with me, but
That could
we
be,
could follow
it could
up.
be very valuable.
Yeah.
And good for you, too.
Yeah.
Hopefully.
Jim, just follow. Is the XD just being used as a second chance for people who are turned down, or is it being used for people who have a traditional score as well?
That's another good question. FICO Score XD is built as a second chance. None of that data affects your traditional FICO score if you've got one. That's why the question today, earlier at lunch. So it is being implemented as a second chance. There's got to be a primary score that does the first pass. And then if you're going to be declined, it'll get pulled.
May I ask Jim, who out there, in general terms, is using the XD score? Are there particular sectors that are subscribing to FICO's XD scoring system and using it?
Yeah, it's a good question. Well, first of all, for confidentiality reasons, I'm not prepared to announce any particular bank that may or may not be using it. I can tell you that right now it's been designed for and is primarily being validated and tested in the credit card space. And we are working with the partners, LexisNexis and Equifax, on more research, on additional data sets, and perhaps, and we'll come back to consumer advocacy groups and to the CFPB and explain new ways we think it can help consumers and get additional perspectives.
Interesting. Ariane?
So this score includes Equifax and LexisNexis data. What other data sets do you feel have promise?
Yeah, this is an ongoing process, and like I said, we're doing work not only here but around the world, and we have looked at dozens of data sets, and we have discarded many because of the 6 factors, those 6-point tests. They'll get knocked out for one reason or another, but we think that. Yeah, and it's certainly being used, kind of by banks that already have it based on their own activity. But we believe that debit data could be helpful and predictive. We believe that rental data, could be predictive, and we're doing some studies there. So we're doing a kind of a range of research, and there's still kind of low-hanging fruit that is organized that will meet the 6 tests. So we're hopeful that we can bring in, and that provides additional coverage, additional depth, and will tend to raise scores ultimately. The whole goal here is, again, there's no business model in identifying people who aren't creditworthy. What we're trying to do is in populations that aren't scorable or have no file, trying to find people who are ready to take on debt and establish themselves in traditional credit. That's where the ROI is for the banks and frankly for FICO.
We have time for one more question. Are we good? Okay. Thank you both very much. Great presentations. Thank you for the follow-up question answering. Thank you, CAB members, for your questions. Let's move forward to our last session of the day. Our final session of the day brings us to yet another way in which the Bureau serves consumers, which is through collection of consumer complaints. In addition to writing and enforcing rules for financial institutions, the CFPB also maintains a website through which consumers can make inquiries and file complaints. And the Bureau has handled over 1 million complaints thus far, many of which have provided relief to consumers. Darian Dorsey, Deputy Assistant Director, Office of Consumer Response, will provide an update on the Bureau's consumer complaint work, and then we'll have a discussion with the CAB. Darian.
Great. Thank you so much, and thank you for having me. I'm really excited to be here today to talk about some enhancements that we are making related to the consumer complaint process. I'll start by going through a little bit about what's not changing, because I think that's always helpful when you hear the word enhancement, to think about the things that are staying steady. One of those is that we'll continue to answer consumer questions. We're going to continue to handle complaints, and we continue to analyze and share data. Around the answering questions, this is a key feature of what we do through our telephone number found on the website. At the top of the page, you can get the same answers to questions that you would get through our Ask CFPB tool that's also on the website. For those that aren't comfortable or just want to talk to a human being, they can call this toll-free number and we'll answer some questions for them and provide that resource to connect them to other resources if needed. Also on our website, you can see that there's the Submit a Complaint button. This doesn't change. Consumers can still do that, and they'll still be able to give us a call to submit a complaint if that is again, their preference. And right now, over the phone total, we're getting around 25,000 calls a month from consumers. And over 70% of the complaints we receive are over the web. So that tells you that most of those phone calls coming into our contact centers in Iowa and New Mexico are questions where consumers just need some information, and we try to be a resource for them in that way. So all of those things are staying the same. Other things that are kind of staying the same is how we help consumers. So when consumers submit a complaint, we're really seeking to provide some individual assistance. So we get those complaints to companies as efficiently and accurately as we can, and work to get consumers a response from those companies, and that's generally within 15 days. A lot of what I'm going to talk about today are some improvements that will really help around this individual assistance element of what we do. And of course, the nice thing about having handled over a million complaints, I think we're sitting at around 1.1 million right about now, is that there's a lot of information that we can learn from complaints. So we continue to analyze and understand complaints to provide insights into problems consumers are experiencing. So a lot of those things will stay the same. But what I want to talk about today are some enhancements, like I said, that will really affect that individual assistance piece for both consumers and companies will be kind of the focus for today. So two areas I want to highlight of some forthcoming enhancements. One is around the complaint form itself, which obviously will be of a benefit to consumers, but also we've added some things and adjusted some things that we think will be helpful for companies as they work with us to respond to those complaints, as well as some company portal enhancements, which for many people, including those in this room, you may never have actually seen behind the scenes. What does the company portal look like? What does that secure interface look like? I'll show you some mock-ups of what it will look like in the future to help companies respond efficiently to consumer complaints. So with that, I'll start with the complaint form enhancements. So one of the things that we've done is over the years since 2011, we've incrementally added complaint handling capacity, starting with credit cards, then mortgages, and so on. The way we did that was by introducing a new complaint form, every time we expanded capacity. There were some good reasons to do this, but it has some downsides, as you might imagine, where we've been maintaining 11 forms. So that means if you want to make a smart change one place, you got to make a smart change 10 additional places. So we're consolidating all of the complaint forms into one single dynamic complaint form. So instead of coming to the submit a complaint page and figuring out which button, you start in one form and move dynamically through the experience. And this will enable us to take feedback that we hear from the public, from companies, from consumers, and more readily make improvements to the form over time, because we won't be trying to change 11. We can just make improvements to one form. The other thing that we are making a change to, which is in response to feedback we've heard from consumers as well as consumer groups, is the ability for consumers to submit online even if they don't have an email address. So we hear from a lot of people that someone, consumer may have access to their public library. They may be perfectly comfortable submitting a complaint online, and that is very efficient. You can attach documents. But if you don't have an email address, the prior form, just because of the way it was initially set up, you couldn't submit online. So consumers would have to submit either by mailing in a letter or over the phone. We fixed that. So that will be fixed so that consumers can still come in. Now they have to add different identifying information. Obviously, we have to have some way, and companies need some way to get in touch with them, but they'll still be able to have that same online experience without having an email address. So the other kind of feature about the complaint form that we think will make it easier for people to use kind of regardless of how they come to the Bureau is that the form is web responsive. This means that you bring it up on your laptop, it works. You bring it up on a tablet, it works. You bring it up on a smartphone or a slightly smartphone. If you can get to a web page, the form itself will adjust, will get bigger or smaller. This is also nice because for those with visual impairments, they can zoom in, right? So they can set it and they can zoom in and see it much larger, and the form will dynamically make those changes. The form's also compatible with screen readers, which I don't know, I'm not the most conversant on screen readers, but it essentially means that for those who have visual impairments and need kind of more than just zooming in, the form works with screen readers. So they'll be able to, it's compliant with that technology or fits with that technology for those with visual impairments. They'll still be able to have the same experience through the online complaint form. The other feature that we are adding to the complaint form is it's a question that we've had on the credit card complaint form since 2011 in a form similar to this, but we're actually adding it across the board, which is the nice thing again about having one form. And this is a question asking the consumer whether they've already tried to fix the issue they're complaining about with the company. So this will enable companies to, if they're looking at a complaint, it comes in, they can quickly say, okay, we should be looking and expect to find this consumer having already reached out to us. This will kind of hopefully help companies more efficiently find information and respond to the complaints when we send those to them. Another feature that we're adding to the complaint form, which is available on some but not all, is we are adding the ability for when a consumer comes on the form and starts typing the name of a company. It's what's called type ahead. So as you're typing, it'll start kind of guessing what you're trying to say. So it's slightly, like you would do in a regular search feature. This will minimize data entry for consumers. It also maps back to our own list of companies as well as other aliases and DBAs for companies. So a consumer can type something like, a partial name of a bank or an abbreviation for a bank, and that will come up. And then on the back end, it'll automatically match to the right institution. So this means just a lot more efficiency in terms of how quickly we can get the complaint to the right place. And again, minimizing kind of the effort of consumers to maybe type in the wrong company and kind of slow down the process for them and for the company. The other thing is, as I mentioned very beginning, when we added this dynamic feature, one of the cool things about adding that dynamic feature is the ability to have questions that are driven based on the product or issue selections. So instead of kind of asking a generic question like account number, which might make sense, might not make sense, instead, depending on which product you choose, it will prompt you to provide different information, so account number or loan number, information that is specific to each product. And so when companies get it, they not only do they get that information that's relevant to the product, they'll actually get they'll know this is a loan number. So they're not just getting a 9-digit number and guessing, is that a social or is that an account number or whatever. It'll actually be clear to the companies that this is the number they're getting. So again, make it really efficient for companies to find that customer in their records. So I want to talk a little bit about the company portal enhancements. A lot of the things that I touched on in the form itself are designed really for the consumer to be able to kind of get that information accurately entered, and for the company to be able to respond efficiently and locate the consumer and kind of facilitate that process. The company portal, same kind of idea. The consumer won't see it, but the idea is to make it more user-friendly for companies. So what you'll be able to see, this is kind of just a little bit of a top bar. It's similar to what you see now if you were to look in the company portal. Companies will continue to be able to export complaints, keeping that feature as it's helpful. Companies will still be able to submit support tickets and view news. We're making improvements across virtually all of those types of features, but those things will kind of continue because they've demonstrated themselves to be useful. You'll also see here the arrow here points to a dashboard. That is really new, but right next to it is complaints, and that's the same view that companies have had since 2011, which is just a list of complaints. So it sort of depends on what works best for the company, but it'll start with this dashboard, which is brand new. And again, the idea is to make it quick and easy for companies to respond to complaints. And they'll be able to do that based on the action needed. So I'll walk through those 6, what we are calling tiles. There's 6 tiles that when a company logs into the secure portal to respond to their complaints, they'll see these 6 tiles. The first tile has a view active complaints. So a company can go in here and just say, I want to see all the complaints that are due and that need responses within the next 15 days. Click that link, it's just going to take those, in this example that I have here, to those 9 complaints that need responses in the next 15 days. So no more kind of going to a list view and sorting or going back through and saying, well, which ones do we need to respond to? That list still is there for those that prefer that work style, but this enables them to say, I just want to focus my efforts on which 9, in this case, complaints need responses in under 15 days. The second tile, moving kind of across the way, these are any complaints that are past due. This is what we love to see, a 0. But we know that sometimes things happen and there may be a past due. We want to make sure that companies see that and know, again, they're not looking at a big list view and kind of missing those that maybe have passed that 15-day threshold. And so this is a list to be able to see that for companies. So when a user logs into this portal, they can quickly see that they have no past due complaints. They can wipe their brow and get back over to the ones that are due within 15 days. We also, right next to it, added a tile that lets companies know those that are due within 48 hours. So it's, if it's Friday afternoon and you're thinking, do I want to do one more? You might want to check this list, right? And this lets companies get to that list of those things that are due within 48 hours, giving companies the ability to kind of manage their own work around this within this dashboard in the company portal. We also have those that are unread. So maybe they're due within 15 days, but no one's clicked on them yet. So it lets you know, like, oh, we not only, we got those 9, but one of those 9 no one's even started kind of looking at yet. And so this enables companies with a single click to get to that one complaint that they need to respond to that no one at their organization has opened up to read yet. Next to that is a tile for those that need more information. So this is where someone on our staff has kind of taken a look at the complaint and is, it indicates, maybe some, yes, disclosures were provided, but we didn't get a copy. There wasn't a copy attached with the original company response. And so this is where those would appear. So again, a company can really quickly say, okay, these are things that I need to look at and see what the Bureau needs on this specific complaint. And then lastly, this is the area, the last tile is for those that are in progress. So companies have 15 days to respond and up to 60 days to provide a final response. We thought it'd be really helpful to know which ones you've already responded to in 15 days, but you said you needed a little bit more time. That's where you find all of these. So a company really quickly can be like, we looked at this once, we still need to get back to those, and these appear really easily. So the dashboard, we think, is a nice feature for some larger companies. They may or may not find the dashboard as helpful, but the idea was for companies, with lean staffing, that they would have this nice dashboard and really help facilitate their work and make it easy to kind of tackle the complaints that they receive from us pretty efficiently. So I'll switch over to what it looks like in a list view. So this list view, this is an improvement upon the existing list view, but this kind of gives you a flavor of what it used to look like. So you just kind of start at that list and see what's available. And so we are making some improvements to this list view itself. Before there was a complaint number, but it didn't have the company's name and address right there. So again, another way that companies, appreciated that within the complaint you could find the consumer's contact information. But wow, would it be helpful if we could just see their name and address so we could go ahead and start kind of looking back through our notes and figuring out if we've already started working on this one or not. So that's one of the things that we added is you can get the consumer's name and address right there in that list view. You can still click into the complaint to get all the details. In addition, we also added the default sort by due date. So the stuff you need to deal with fastest goes to the top. I really wish my Outlook would do this, where I kind of could triage it. We tried to kind of create that little bit of a triaging feature. All of these, column headers are sortable, but this is the way that the list defaults. So you know what you got to deal with first. We also added a column for alerts. So if there is a complaint that's past due, you can see that, and that's flagged, and it's nice and clean and in that column. And then lastly, we added some more robust search and filter options. So depending on the volume of complaints and how a company is kind of approaching analyzing complaint information, we wanted to make the portal as usable as possible in that. And so if you were to click on that filter and search, if you kind of go into the filter and search option, you would be able to, 2 new features that are particularly new are the ability to search by consumer name. So you're like, I'm looking at these lists, I'm not finding the one that I thought I would find. A company can go in and actually just readily search the consumer's name. So this is really helpful if the consumer is now kind of complained to us and maybe gone back to the company and they're contacting someone, they can quickly find this consumer's complaint regardless of kind of where it is and responded to or not responded to. They'll be able to kind of find that complaint pretty quickly, and that's new and with the company portal. The other thing we added was the ability to search by date ranges. So for a lot of companies, you don't really need to necessarily know about a complaint that was 6 months ago. I may not want to export a complaint from 6 months ago, but it would really be nice to know everything we got this month, right? And to be able to pull out everything from this month, everything that was sent to the company this month, as well as everything that was due within a date range. So again, we know, on a Friday afternoon, we want to know what we have to deal with the next week, be able to export by due date and figure out what's due next week and be able to manage work if they choose to in that way. And it's a little bit covered here by the drop down, but we also have the ability to do those same searches by the flag. So past due, unread. So again, a company doesn't have to use the dashboard. They can use this if that's helpful. And then all of this kind of ties back into the export functionality. So you can use this to get to the complaints you're looking for, but for companies that are looking to export this information from the company portal and then import it into their own proprietary systems or into another analysis, they're able to kind of refine their searches, get just what they're looking for, and export that from the company portal. So these are just a few of the highlights I wanted to touch on today. But I'm open to answering any questions, and as always, I like to think that these things maybe prompt other questions and ideas, and I'll take vigorous notes because again, we're really open to feedback on this and want to make it a better experience for companies and consumers over time.
Gene?
Hi, this is great work, and I think this has just been a valuable utility for understanding what some of the issues that consumers are dealing with. But I know I've gotten some feedback from some lender partners about, the resolution matters and how they could document that. So is that incorporated in here? So what happens with the complaint, and whether it was resolved or whether it was, whatever happened to it?
So you're talking about in terms of whether the bureau is done with the complaint. That piece of it, kind of the feedback loop at the end. So that is not available in here in part, and it kind of jumps all the way back to one of those early slides, and that is in the answer questions, handle complaints, and analyze and share data. There are those complaints that we may pick up in an analysis and look at and have maybe questions or maybe still be looking at it in groups of other things. So we haven't communicated to a company that a complaint is kind of done with. But in general, when a company has responded and they don't see kind of a request for additional information, that means for all intents and purposes the actions on that complaint are done, kind of that individual complaint, though we may look at it in a broader analysis or cohort review of similar complaints.
Josh?
Yeah, again, great work on this, and we've been following this for a long time and know it's been a huge challenge to set up such a huge system, and also really commend the Bureau for pushing to make this information public in the database. It's been a really critical source of information for people. And my question is, we had also talked about this, several meetings back, but one of the important things about this database, obviously, is that it enables the Bureau to have another system for looking for patterns of abusive practices for supervision and enforcement. So can you talk a little bit about the system that you've set up in working with supervision and enforcement to flag potential issues for further review? Is there a system for flagging a single complaint, or does it have to be a pattern? How does that work?
So I won't speak too much to the work of supervision and enforcement because I only know enough to be dangerous. But I will say we continue to look at things in groups and also to identify individual complaints that may need some additional follow-up on them. That's why you kind of continue to see that sort of button on the bottom row for complaints that need additional information. And so we continue to do both. I mean, with 1.1 million complaints, about 22,000 give or take a month, we have to be pretty strategic about how we're allocating our resources and what we're looking at. So it's a combination of using trend analyses, text analytics, other tools to look for patterns and trends and changes, as well as and partially through that process, but partially through other means, identifying complaints that need additional attention, follow-up, investigation. And both of those can be sources of information for supervision and enforcement, both in kind of a push and pull. So there's sometimes where there's things that we push, and there's sometimes there's things that they ask, are you seeing this thing at this place? And so we're doing kind of both. We try to really provide that individual assistance in terms of a response, and sometimes, where appropriate, an additional level of individual assistance if it makes sense. But we really are focusing in large part, given the volumes, on those patterns, trends, insights, what the complaints kind of taken collectively can tell us, and what we can learn about the consumer's experience.
Judy? I would hate myself if I left here without telling you how magnificently wonderful this complaint database has been for consumers. It's probably for my mind, like the single best thing that's happened for us. And it reminds me of a story of a case that I had before there was this database, where it was a very obvious mistake the lender had made. It was so easily fixed. And numerous phone calls, numerous letters, nothing happens. I finally had to file a lawsuit, and their lawyer called and said, "Oh my God, really? Did you try to fix this?" And I gave her the list of all the people we'd called and all the letters I'd written, and she said, "Where do I send the check?" Well, frankly, this solves the problem without them having to send the check. Because now when I have that kind of complaint and we can't get through to anybody, one complaint later, and I would say 80% of the time, the problem is solved within a week. And that most of my clients don't want lawsuits. They just want the problem fixed. And so I just can't overemphasize how valuable this is for consumers. And thank you, thank you, thank you.
Will?
First, let me acknowledge what you've done around this is huge. I mean, it's dealing with this amount of data is challenging, and your willingness to continue to invest in the improvements is appreciated, because we don't always see that. A couple of things that I think many of us would like to see from an improvement standpoint. The first is the duplications that continue to be out there. So same complaint, same person, issuing the second time still shows up in the numbers. You know, with the sophistication that this has, those should be able to be kind of taken out so they're not double reported, first thing. Secondly, the rating system that's being discussed, I really hope you'll give some real thought to that, and at least give the voluntary nature of it is one concerning, because obviously it's going to have a negative skew. But just having a scale where there's agreement on kind of what it means, what the rating means, so there's consistency and a standard would be good, so that it is something that is actionable, both in a good way, and if there's negative news, that it's something that is truly a standard and can be thought about. From a forward-thinking standpoint, the ability as you build this and as you continue to invest in it, kind of with a lens towards how can either it connect with the financial services own complaint data management tools, or vice versa, so that we continue to have kind of what I'll refer to as a gold standard as we come together. I think it'll be easier not only for consumers, I think it'll be easier for the financial institutions, and would hopefully be a win for both sides. So, but thanks again for all the work on it.
Thank you, and I'll talk a little bit about a couple of these. I'll take them a little bit out of order, but the ability to have our system talk to other systems, the automated programming interface, I believe is what the API stands for, is absolutely top of mind. It's not the first enhancement that we're making, but we recognize and see immense value in it as well. So stay tuned. I can't promise speed on something as complex as an API, but it is something we're very well aware of, and think it would make a lot of sense and save a lot of steps for a lot of companies. So it's something that we want to do as well. On the duplications, one thing, and I don't have any kind of screenshots of it here, but one of the things that's built in to the complaint process, in particular the complaint portal, is something called administrative responses. So they're all the complaints that you can respond to, where you're like, okay, this consumer, we're going to refund a late fee. There's a category for that. There's a, oh, we thought you understood this product. You didn't understand this product. Let's explain it to you. There's a category for that. But there's also these administrative responses. And one of those administrative responses is duplicate, where if a company can tell us that, hey, we got this complaint from this consumer about this issue, they give us that complaint number. That complaint is flagged as a duplicate. It comes out of all official reporting. So it's not included in our reports to Congress. It's not included in that 1.1 million number. It doesn't go in the public database. So those administrative options are available. And there's some additional ones that are there as well. But that duplicate, I would just encourage any company that finds one of those where a consumer is kind of persistent in submitting a complaint, flag it. We want companies to use that when it's appropriate, so that we can back it out of everything, so that we don't report on those in any of our numbers or put it in the database. In terms of the rating system, that's still out for consideration. It's with the Office of Management and Budget, so we will kind of wait and see the status of that before we move forward on that. But we received a lot of feedback during that process, and always kind of thinking about how to do that in a thoughtful way. I appreciate it.
Julie?
What accessibility standard are you designing to, or are you bound to design to, and how close are you? And thank you for your work.
So we are bound, at least in part, and I won't know all of them, but there are people at the Bureau that we partner with who know these things very, very well. But there is a 508 compliance standard that is what this form is really designed to do, and part with the screen reader technology. But that is kind of the lens through which we're viewing this. And again, that's the beauty of having one form instead of 11, is that we can make it increasingly accessible instead of trying to make 11 forms better on that. But it's my understanding that it's, and not being an expert on 508 compliance, but that we are certainly compliant, but there are ways to be more compliant and better and better and better. And that's kind of the lens through which we view this whole exercise of handling complaints, is making it a little bit better for everybody on both sides, because you got to imagine consumers are frustrated, companies are frustrated that something's missed, right? Something's not lining up there, and we want to make it efficient. And so accessibility kind of goes in there as well as something we want to continue to refine. I think this is a big step forward, and one that we've been wanting to make for a long time, is to have it be that web responsive and have it be more 508 compliant and compatible with those screen readers.
Kathleen?
I don't think there's such a thing as a person reaching the point at which they're saturated with compliments. So I'm going to say thank you. Great work always. I really impressed. I have only one concern, and that's about some of the language. And I'm looking at the complaint form enhancements. And I know and I appreciate how you are really using clear language in almost everything that comes out of the CFPB, even stuff that's in the Federal Register. The notices of proposed rulemaking are easy to read, but I don't think people understand what the word underwriting means. And interestingly, you talk about closing on a mortgage in New England. They don't say that; they say passing papers. So that's what they say. So you maybe it could be signing a loan, something like that. Pardon me? And closing process may be a similar thing. And then under like the trouble during payment process, maybe trouble with payments. Because then people go like, what's the process? I'm not sure. And by now, people should know what servicing is. But even in my household, I'll say, no, U.S. Bank is our servicer, not our lender. My husband will look at me and say, wait, explain that to me again? And he's a kind of sophisticated guy, and he's lived with me for 35 years, so he should know what a servicer is. So I think that just if maybe, I don't know if you've done some testing with consumer understanding of terms, so this may be the best that can be, but I have those concerns.
Yep. Thank you. We have done some consumer testing around language. It is difficult to strike that balance between sort of an attempt at precision without kind of going too far on that, and also maintain that plain language balance. We impart and I think you're looking at maybe one of the earlier slides. I'll kind of slide back to that if I'm technically able to. Yep. So either one of these. So the nice thing about this is each of these buttons, it's not perfect to your point, and I did not know anything about passing papers. I think that's fascinating. I'm not certain we'll totally be able to ever achieve that level of nuance, but who knows? Time. But what we tried to do here is this is sort of the nice thing about the dynamic nature of the form, is that this is the start, right? So this is where you can say, what type of problem are you having? In some cases, there are going to be sub issues where we can try to get a little bit more granularity. The idea here is to have a single issue, but to give some helper text. So if people are thinking about different things a little bit differently, you kind of understand what goes in each category. And then we report out on it with those categories as well, but try not to be overly precise. For those that are familiar with the credit card form, there was a point at which it had like 33 issues. It's like, that feels really great from a research perspective. That's a lot. They say consumers, or people can remember 7 phone numbers. I can't even, or 7 digits in a phone number, and after that it's kind of out. I can't even imagine the 33 kind of scrolling through. That's something we've addressed here. I don't have a screenshot of that, but trying to kind of be smarter about how these things are grouped. And it is a balancing act. We did test it, and we'll continue to make those refinements over time.
The one that concerns me the most is closing process.
Yep. The closing on a mortgage?
Yeah, I think
Yep.
closing on a mortgage loan or closing, something like that makes it that clear.
Mm-hmm. Thank you.
I've got a new phrase to bring home with me now. This is great. I always learn something. Yeah, we got to get around R2D2 here. But and it's looking right at me. I made it angry. I just wanted to say, your approach here, I think, is reflective of what the Bureau does generally, and being very responsive to input from all stakeholders, and really responding to what are reasonable complaints about the way things might be working, or looking for ways to improve it, and continually looking for ways to improve the process here. So that I just appreciate the work that you have done and continue to do on this. I also echo what Judy said about the usefulness of the database itself, and hearing from partners in North Carolina as well, is that a number of them who have counseled their clients to put a complaint into the process have said they've gotten faster resolution than they were able to get before, that having that behind them has been helpful. I think even within the law enforcement community, they've said that having the complaint go through the CFPB's database has been remarkably helpful in getting resolution to things that otherwise were taking much longer to do. So that's great. And I also and I know that this is something that y'all have been paying attention to a lot, but continue to pay attention to how the public might be able to access the complaint data as well, to be able to continue to look at it, to filter it, to search through it, to be able to take a look at where there might be specific issues, or if to be able, especially when we might hear about a one-off or two-off kind of activity going on in a particular lending marketplace, to be able to look to see if there's additional complaint data to decide, is this something that people really need to be worried about, or is this just something that's just sort of an isolated thing? And so being able to use that database more effectively, I think, would be really helpful. So, and I know you've all been working on that, so I just want to applaud you for continuing to look at that.
Thank you. And we do continue to work on the database itself. And this sometimes is a point of a little bit of confusion. There's the complaint form and the database only includes those complaints that have been sent to companies, and to which companies have had 15 days to respond, or have already responded to them. This is kind of the front part, right? So this is like getting that part refined, but we haven't lost sight of the database itself. There's some things that it does better than it used to, like you can word search a little bit, you can certainly still export it. There's a lot of information there, but it isn't a really simple navigable tool like we have with tiles. You wouldn't be able to just kind of click a button and say all of any particular thing. But it is something we continue to work on.
To build on that issue of accessibility, I'm wondering for cab members what remaining sort of key accessibility issues that you think accessibility gaps still exist in using that consumer complaint database. What do you think would be key? Can't be all things to all people, but what additional features would you like to see? Joanne.
I don't know if this falls in line. I ask this of you every year. What's going on with positive comments?
Yeah, so that is part of what we did with the Paperwork Reduction Act statement related to having the rating, and that is kind of with OMB for now. But that was in part a way to try to gather some of that information and give an opportunity for consumers to tell us when things have gone really well. I will tell you kind of anecdotally, and it's kind of internal facing. Every week we get thank yous from consumers, oftentimes praising us and the companies for their handling of a particular complaint. But it's not tied back to an individual complaint, which makes it a little tricky. So we got to do a lot of kind of work on the back end before we would ever highlight something like that. We've got to make sure that that story that the consumer submits matches up with a complaint and everything checks out. So it's something that's kind of in a holding pattern at the moment, but it is something that we're still looking to figure out how to incorporate more positive information in time.
Any other items that folks would suggest? I'm wondering about, let me bounce for a moment back to duplicate complaints. So we've talked to consumers who feel as if they've gotten the same response back from the company that they got the first time around when they made contact directly on their own, and don't feel as if the complaint process, actually, I should start with praise, which is we love the complaint database. Absolutely. Huge step ahead. And we also get lots of good feedback from consumers who are able, particularly with regard to credit card problems, had tremendous success in using the complaints system for resolution. On other items, sometimes it's harder to get for the consumer to come out the other side with a sense of resolution. And these can be very complex complaints that people have. So I wonder at whether for consumers who feel as if there was no resolution or not any forward movement, I wonder about what sort of perhaps increased communication or different kind of communication can be made to the consumer to indicate to them why the CFPB thinks this complaint is done.
Mm-hmm. Yeah, so this is a perennial challenge that we have around communicating the closure of a complaint. We get into a bit of a challenge around making a determination with frankly what would never be enough facts to actually, without kind of further digging, to look into. So we can understand a little bit, we can get some insights, but we can't say this party should have definitely done this, right? We know one side and we got a couple paragraphs from a company, but we don't have enough information until we go and do a document request. So it isn't really a good substitute for that. And that's kind of what has kind of always been a little bit of a blocker with that. One thing that we want to do, which has a longer time horizon because we've got to figure out a way to do it smartly, but is to try to marry the complaint process with some financial education. So it's very early, but the idea of and this is part of figuring out which part of the process you've submitted a complaint about this. Did you know that, right? So here's some information about that, or here's another resource that the Bureau already has. It's a little challenging, of course, to kind of connect these things, and similarly at the end of the process, thinking about that. But it is helpful for us even now, current state, and as we make these improvements, for companies to tell us when the process has or hasn't worked for them. We need that information, continue to fold it in, and continue to think about how to help with consumers. Some issues just won't be solved at the individual level, and that's why that market information is helpful. There may be one credit card complaint, for example, that maybe doesn't get fixed, But if there's a pattern of 67 or 6,700 or some other number, or when we look at them, even if it's just 6, but they all have the same fact pattern, that may tell us something that we look into. But resources being what they are every place at every organization, we have to be pretty smart about which ones we do that extra deep dive on. But yeah, looking at it in a bunch of different ways, I think still.
I like that idea of tying financial education somehow into the complaint process. Other questions, Josh?
Yeah, just a quick question. There were issues early on, I know, around complaints where the issue was in litigation, and this was obviously a problem with mortgage foreclosure complaints, which are, of course, very difficult to resolve through this type of portal, but also a big problem with debt collection actions, where there may have been a way to resolve it through the complaint process. Has there been any progress on working that out, and how is the Bureau treating those complaints? Or maybe that's for the legal folks.
Yeah, it's heavily involved in it's largely a legal kind of hurdle. I'm non-lawyer here, so I can't really speak to the kind of nuance of that. I will say that we report on in our annual report to Congress. We'll have another one coming out at the end of this month. So for those with insomnia, but it's a thrilling read. But we also include in there the breakdown of administrative responses, and I believe we even break down the type. I'm not certain, but I know that this is something we keep a close eye on because we've heard the feedback and we're sensitive to it as well. It continues to be a very, very, very low percentage of complaints where the company says that it's in litigation. And I think within our company portal manual, over time, we've refined the language to make it clear what it means to be in litigation. It's in litigation on this issue and so on. And I don't have the specifics of that definition committed to memory. But I think what we see is there are a lot of times where there may be something litigation related, but a company nonetheless responds to the complaint because it doesn't meet the definition, or they feel like it's a good idea. It's fine. We can respond to this. Now they may on the back end have a different part of the organization responding for their own kind of risk management, but we see that that's a really low incidence of companies selecting that a complaint's in litigation.
I'm wondering what the hardest parts are for industry when it comes to using the complaints system. If there has been a theme to industry concerns about the functionality of the system in some fashion?
I think it touches on a point that came up earlier, which is for larger companies with higher complaint volumes, it is a system that they have to go into and pull information out of and enter information into. I think that is the one thing that, like I said, we weren't able to get into this bucket of enhancements, but that we very top of mind is figuring out how to establish an API of some sorts, an automated programming interface, I believe, that would enable a company to not have to go in, but be able to make their own responses in their own proprietary system and have it really linked up. I think that's the one thing that we haven't really cracked. There's little things across, and I'm just hitting the highlights. So there's actually more improvements and things we've listened to different industries at different times and said, yeah, we can. If you're a debt collector, what would really be helpful for you to have this type of information? We've tried to make that what we were asking on the form. So there's lots of little things I think that we're fixing here too. But this is kind of an overview. But I think the API is the big. Is the big thing that we know would really help companies more efficiently respond and not if you're for your smaller non-banks, this kind of having this tool available means maybe you don't have to build out nearly as much, and so we try to make it useful, but we understand for larger companies it makes a lot more sense to have that API.
Yeah, I don't think there's much of a concern around did I cut somebody off? Okay. I don't think there's much concern around the functionality. I think it seems to work well. I think that some of the concerns are just around the amount of information that would ever be provided out of the complaint database. I think at one point there's consideration maybe of including the company's response as part of the public information in the complaint database or something like that. And there's a little bit of a concern maybe that would limit our ability to really provide the customer a robust explanation of everything that happened, sort of realizing that was sort of going to go public. And so that sometimes there's a concern just around how much the information is out there, I think. But otherwise, around the functionality, we haven't had much of a concern.
And that was an area I would point to as an example of, we put it out for comment. Industry had exactly those concerns that if we were to publish the company's response, that could create challenges in terms of the quality of response and other kind of issues for companies if it was going to be for kind of multiple audiences in that way. And based on that feedback, that's why we added what we called optional public responses. 9 categories of responses so that companies can indicate to the public kind of a general assessment of the validity or kind of factual information in it, whether they could or couldn't verify the facts and so on. That was one area where we tried to listen to companies and make that adjustment before we started publishing consumer complaint narratives.
Great. Anne and then Kathleen.
Just one thought that's come to mind that could be helpful for consumers is to have a little upfront sense of what they might need to have pulled together in order to submit a complaint, or a way to walk someone through the process without having to enter fake information in order to move from screen to screen.
Right.
Just a thought. It's a tough thing because you don't want to make it so cumbersome, and then people look at it and they go, "Oh, that seems like a big deal. I'm not going to do it." So I understand the psychology issue.
Yeah, we do have, and again, I don't have a screenshot of it, but I think we do have a page that kind of envisions that. One of the things, the balances we try to strike is we don't want consumers very often taking like 3 bankers boxes to Kinko's and like scanning in every bit of their mortgage documentation and then like upload. Like, I don't want a consumer spending 16 hours like on this complaint form. So we want to strike that balance. It's like pertinent information. We continue to work on how do we provide helper text, and that's one thing that that we have kind of before you get into the form, providing that and trying to be a little bit better about kind of helping consumers figure out what they should have. There is separately, I know we've gotten requests in the past, and it's something we're open to figuring out how to do, which is a little bit of a like a video or something, so that everyone doesn't have to kind of go into the form and fake it out like I do when I'm trying to figure out like what's the sub issue for, and I'm like, well, let me just get in there and look at it and figure out what the sub issue for that particular issue is. Coming up with a way to make it something people can see and kind of explore the form without actually having to start a complaint. But nothing gets submitted until it's submitted, so it doesn't hurt if people want to do that. You certainly can, but we're open to doing some other way of a tutorial or something in time.
Kathleen?
I just have a quick thought, and it's partially in response to Brian and also to Joanne. And I haven't tried putting in fake names, so I don't know what happens further down the street. But is there any automatic question that goes out to the people who file complaints, asking them whether the issue has been resolved and if they're satisfied with the resolution?
So we let, what we do is, and this is current process, and this will continue, is that when a company responds, so at every point along the process, we let consumers know what's happening. So if we have an email address, we're going to email a consumer. If we don't, we'll mail them a letter. But we'll let the consumer know that we've received it, that we've sent it to the company, and that the company's responded. At that point, we invite the consumer now, as we pretty much always have, to provide us feedback about the company's response. But it's very unstructured, right? So it's just unstructured information that comes back to the Bureau. They kind of continue to have that until we have some other option, and that's what's, like I said, is kind of sitting under review right now, is the idea of having a way for a consumer to kind of say, this was great, this is fantastic, this is exactly what I wanted, or it's not what I wanted, but they were, and there are 3 different questions, but there's some supplemental questions that are around, I understood the company's response, so like I didn't get what I wanted, but it was really clear, great for that. So we have that, but it's still under review right now.
Okay.
So in lieu of that, we'll continue to let consumers kind of provide feedback at the end of the process.
Yeah, sorry if I missed that earlier, but it does, I think, is a way to get positive information too. And I know, I've told you before, I had 3 students who were ripped off by payday lenders who had made facsimiles of their signatures and were drawing checks repeatedly from their bank account. They sold them, the facsimiles, to a third party, but they didn't know what to do when everything work, they wanted to do something, so I said, well, write the director. I don't know if they ever did, but it would be easier for them to just say yes, knowing students. Thank you.
Joanne, did you have a comment on that?
And the percentage rate, as I recall, was anywhere between 82 and 87%, where consumers were satisfied with the response. This is maybe going back a couple years. I don't know what the current data is, but I don't think it's gone down. I think it's kind of stayed the same.
It stayed very steady in
Yeah.
terms of the percentage of consumers that dispute the company's response. We've shifted away from that terminology, and we're kind of continuing that shift because it creates a challenge for consumer expectations. This is one of the reasons why we're looking at making a shift to get more of a rating, the different kind of aspects of an interaction. But it varies by product a little bit, but it does hover around 20 to 22% of consumers dispute the response. But we don't tell consumers, because they're busy and they have things going on, that they need to tell us if they're satisfied. There isn't like a yes, no, or blank. But that's kind of what we're hoping to move towards in the future, is more that spectrum of comments based on the company's response in the process.
Thank you.
Paulina?
Just a quick idea about like text messaging for folks who are not to get a response, who might not be, just to get that yes, no, and rating response might be a way to get for folks who might not be as prone to writing responses back.
And we are, text messaging is always on the list, but that is a good idea in that context of being able to kind of trigger something like that. Part of it too is we want to strike the balance between being helpful and annoying. I don't know if you guys are on mailing lists, you get emails.
Less annoying than email.
Right. we want to strike that just get that balance just right between being helpful and annoying. So, but I think that is a good thing to note. I'll kind of add that down here about whether satisfied via text.
Okay, unless there are any final pressing comments, I'm going to go ahead and thank Darian very much for spending time with us, walking us through the system, and for all the work you're putting into improving the system. Thank you to CAB members for your engagement and participation, your active participation. We've learned a lot together, shed new light. A lot which has shed new light in ways in which the Bureau has continued to live up to its mission to serve consumers and make for a more workable marketplace. And because of the Bureau's work, I feel as if consumers are clearly better protected, better informed, and give clearly increased data accuracy when it comes to credit reporting information, which is key to so many different aspects of people's day-to-day lives. Thank you, CAB members, again, for providing feedback and insights, which I know that the Bureau takes to heart. And this meeting is now officially adjourned. Safe travels.
Can I just add on behalf?
Sorry, David.
Just
yes.
Director, certainly on behalf of Director Cordray, who is still at the FSOC meeting, add my thanks to Maeva for leading us effectively and efficiently, and to all, particularly the members of the CAB who've hung in for us to the bitter end. Most particularly that member of the CAB who's done so with a new grandchild awaiting her, But to second, I come away with a long list of notes of to-dos and things to follow up on. We learn an enormous amount from you, from your questions, your suggestions, your presentations, the insights you bring to us, and it makes us much more effective and energizes all of us who participated with you the last 2 days. So thank you.
Can I add something really quickly? For those of you who know that my grandson was not being released from the hospital because my daughter and son-in-law could not agree on a name, he just got a name. It's Leo.